At this time, I'd like to introduce our first speaker, Mr. Jack Rybicki. We were fortunate to have him amongst one of our speakers today. Jack is the managing principal of CLA's real estate practice, working to enhance the firm's service capabilities to developers, owner-operators, and investors in real estate, and has been a leader in CLA's COVID-19 relief resources. With more than 28 years of accounting experience, including 25 in public accounting, he is also responsible for performing and supervising audit, accounting, and consulting engagements. Jack currently concentrates his practice working with companies in our real estate group, including developers, owner-operators, and real estate investors, funds, and also serves selected construction companies. He serves a wide variety of entities in the real estate industry, including land developers, home builders, commercial, multifamily, and student housing owner-operators and investors, as well as construction companies. Jack is also involved in CLA's capital markets activities, helping our real estate clients and fund managers raise capital. Regarding CLA's COVID-19 relief efforts, Jack has been a frequent presenter on the Paycheck Protection Program and CLA's live stream series, and authored a number of pieces on various aspects of the PPP. Working to educate the CLA family, our clients and small businesses on this extremely important and confusing program. Before I hand this over to Jack, we ask that if you have any questions during the presentation, please submit those in the chat section. Due to time constraints, we will provide all questions to Mr. Rybicki after today's meeting, and he has graciously agreed to respond to all by email. At this time, I give you Mr. Jack Rybicki.
Great, Darlene. Thank you so much, and I appreciate the opportunity to be with all of you today to talk about the Paycheck Protection Loan Program that I'm sure many of you are hearing about. And as we pulled together this presentation today, really we're trying to tailor it to the individuals that are going to be on this call as either independent contractors or self-employed folks. As most of the information that you've seen thus far in the program really is related to the companies that are applying, and in particular, a lot of the press is around the larger companies that applied and may have returned those dollars. The good thing is, though, that this is helping small businesses. The average loan size in the initial grant was about $200,000, and we're hearing now that the average loan size for the applications in the queue now is down to around $100,000. Secretary Mnuchin just announced that earlier today on an interview on CNBC. And so what that says is that we are starting to see a lot of small businesses, independent contractors, and self-employed individuals be able to take advantage of this program. So hopefully the recent allocation of funds here will be sufficient to help out. So I'm just going to go through some of the key provisions of the Paycheck Protection Program now. The total funding for this program is now up to just about $660 billion. The original allocation was $349 billion, and that ran out in just 8 business days after the program started taking applications. Applications for the current funding tranche, which was roughly $310 billion, just opened on Monday. But there was some speculation that that may not even last the entire week this week because of the demand that's out there. We don't have additional assurance that any more amounts are going to be appropriated for this program in the future either. So there is a concern that if you don't have your application in now, or if you don't get it in soon, you may not be able to take advantage of this. However, we are also hearing that there are, a number of movements around a larger next version of the CARES Act that will potentially encompass additional appropriation of funds here. But we don't know what's going to happen there for sure. So, get your application in soon if that's something of interest. So in the next slide, we're going to go to how independent contractors and self-employed individuals can take advantage of this program. First, you have to, the application process didn't open for you until April 10th. So a week after the original application date, and only about 5 business days before the program actually ran out of money. And so a lot of independent contractors and self-employed were obviously squeezed out of the first round of funding. We didn't even get rules around loan sizing for independent contractors and self-employed individuals until April 14th, a couple days after the application process opened up. But I just want to cover the rules in general for you. And the program itself is limited to basically reimbursing somebody for up to $100,000 of compensation or earnings, that they had. And so if in 2019 your earnings were 100,000 or more, you would be limited to a loan size of $20,833. And that assumes you have no employees. And what that number represents is really just a simple average monthly compensation amount of at a maximum of $100,000 times 2.5 months, which is how the loan is sized. If you made net earnings on your Schedule C of less than $100,000, then your loan amount would be reduced accordingly, and you would just take your Schedule C amount, divide that by 12, and then multiply that times 2.5 to understand how you would size your loan. If you happen to have employees in your self-employed business, you can include them in the wage base used to size your loan, and you can also include any health benefits or retirement benefits you apply for or you provide to them. So again, using the information off your Schedule C for 2019, you'll take your earnings, add the compensation to other employees, add the health benefits and retirement benefits paid for the employees, and then that becomes your average monthly number, and multiply that times 2.5. That will give you the loan size for that. There was a very helpful piece that was just put out that we'll cover on the next slide. The one good thing about this program, though, that I want to make sure everybody understands is that these loans are subject to either full or partial forgiveness. And so if you use the money to retain your folks, if you had employees, or in the case where you don't have employees, it basically becomes income replacement for you as a self-employed individual. So if you can go to the next slide. I mentioned the guide on loan sizing. This came out on April 24th, and there's a link on the website here, and I'm sure these slides will be available to everybody. You'll be able to look at how to calculate the loan amounts there. And they've done a really good job for independent contractors with and without employees, self-employed individuals, those types of things, analyzing each one of those situations directly. Next slide, please. So I wanted to cover the basics of loan forgiveness, but before I do that, I do want to highlight something that's been in the press quite a bit lately, and that relates to whether or not your business qualifies or was eligible. I don't have a slide on this, but Secretary Mnuchin just clarified, some comments around this eligibility, and it's getting a lot of scrutiny. I do think it's important for everybody to understand that if you take this money, you'll be on a list, and that list will be published, and your colleagues will know that you applied for and received PPP loan proceeds. We're having a lot of clients right now, because they don't want the public scrutiny attached to that, either not applying or returning the funds if they've already received those. Obviously, that's a personal decision each one of you will need to make. But I do want to just highlight that there are a lot of questions around eligibility. Now, most of the attention is being focused on larger companies, and Secretary Mnuchin today announced that every loan greater than $2 million will be reviewed by the SBA prior to any forgiveness being granted. Now, while that may not apply to a lot of the folks on this call, a lot of the companies that you may be working with, if you're representing them, may fall into that category, and you might want to provide some information to them there. But in terms of the basics of the forgiveness, I mentioned it could be all or in part. It really is based on the costs you incur during the 8-week period after the loan. But again, that's only if you have employees and other folks that you've involved in the process. You'll have to apply for the forgiveness just like you did for the loan through a bank. And there'll be a verification process of all the expenses that you paid that were the allowable expenses. And we'll get into that in a second. You will get a conclusion from the bank and the SBA within 60 days of submitting that information. But right now, we don't have a ton of guidance from Treasury on this topic. And so we expect more over the next week to 2 weeks. If you can move on. So key definitions, what can you use this money for? And the reason we've got two different ones here is because there are certain things that are allowable uses, and those are a little bit different than what is potentially going to help you size your forgivable loan. So allowable uses that are consistent are that you can use them for payroll costs, and this would include your income replacement at that up to $100,000 level. You can also use it for interest on mortgage obligations that you have. You can use it to pay rent and utilities to maintain your facilities as well if you have a place that you rent. For forgiveness purposes, the only thing that gets considered is the 8-week period starting at the loan origination date. And any amounts that get forgiven are limited based on your employee retention, any wage reductions you may have implemented, and you can only get forgiveness for non-payroll costs, so that interest on mortgage, rent, and utilities, that can only constitute about 25% of your forgiveness. If you don't spend all the amounts during that 8-week period, there are additional allowable uses, and that you can also look at interest on other debt obligations. So think copiers, if you have a car lease, for instance, those types of things, all of those would be includable in the allowable uses. And you will look at a broader period as well to justify that you spent all of the funds on allowable activities. So you can go to the next slide. So there's 4 items to consider in the forgiveness test. And again, we're covering this at a very high level, but the first item is, did you spend enough money to justify the loan? And so in the typical setting where you've got employees and everything, you'll have to show that you spent enough money to that equal to or greater than the total loan amount. If you spent less than that, you'll have a limitation on the amount that can be forgiven. Then the other question is, did you maintain your FTE count? So as an individual, if you're just an independent contractor or a sole proprietor without employees, there's really nothing to do here in terms of the next 2 tests. But if you do have employees, then you're going to have to look at, did you continue to pay them and keep them on during this 8-week period following the origination of the loan? The test for that is actually looking at your FTE count during the 8-week period and then comparing it to one of 2 periods that are, I'll call a pre-COVID period. So one of those would be a period that is from February 15th through June 30th of 2019. And then the other period that you can select from is January 1st through February 29th of 2020. And so you'll take the lower of those 2 because that's the denominator in the equation and compare it to your actual FTE count. And so for instance, if you had 10 average employees last year, average FTEs, and in the current year you had only 8, then by virtue of that, only 20% of the loan would not be subject to forgiveness. 80% would potentially be subject to forgiveness because you retained those employees. There's also a wage test, right? If you think about this act was called the Keeping Americans Employed and Paid Act. And so they also want you not only to maintain them, but they want you to maintain their salary at levels that were commensurate with pre-COVID periods. In a business like yours, where dollars could be lumpy and they don't always come in a uniform fashion, that can be hard to figure out how you're going to pay your employees. The one thing you need to remember is that the maximum that is an allowable use for anybody is up to $100,000 annualized. And so during a 8-week period, that maximum is $15,385. It's not that you can't pay people more than that if that's what they were earning before, but that's all that you will be able to account towards your allowable uses. Now, if somebody was making more than $100,000 though in prior year, you don't have to measure whether or not they're getting their compensation reduced by more than 25% in this period. So this is really meant to protect folks that were making less than $100,000. And the test here is if you had somebody that was making effectively $50,000 last year, but this year, post-COVID, you said, we're going to pay you regardless because you're going to get this PPP loan, but we're only going to pay you at an annualized rate of $30,000, right? So at 60% of their expected number from last year. Well, in that case, you're going to compare that 60% number to no more than a 25% reduction. You're going to say, well, I've reduced that individual's pay by more than the 25% allowable. And again, that excess amount is going to not be subject to forgiveness. And last but certainly not least, I mentioned that only 25% of the forgiven amount can be spent on non-payroll related costs. So they really are focused on maintaining your payroll, keeping those people employed, and continuing to pay them in a lot of cases where they might not be able to work and might not be earning the dollars now for your business. And if you think about it, going back to the original spirit of this was really meant to say, okay, these folks could be on unemployment, or we can continue to pay them through the small businesses that we already have. And so taking a loan is your commitment that you're going to continue to pay these workers so they don't have to go on unemployment. And to do so, you have to do it at a reasonable wage rate, right? So those are really the 4 items that you consider for forgiveness. And there's a lot more complexity behind that, but I wanted to just kind of boil it down to some simple do's and don'ts that you could have here. The FTE calculations can be a little complicated, particularly in instances where you don't have full-time employees, and maybe you have employees that don't really report hours to you. And from an FTE perspective, somebody that works full-time, which the SBA defines as greater than 30 hours a week, that counts as 1 FTE, whether they work 30 hours or 50 hours. Obviously, salaried employees count as 1 FTE, but if you have people that are working for you on an hourly basis and they work less than 30 hours, then what you do is you aggregate all of those hours together and then you divide that by 30 to understand your FTEs. And you would apply that consistently in the pre-COVID period and in the period related to the 8-week afterwards. So those are some of the nuances related to the FTE calculation. Now, there is a concern out there that there might be an issue with respect to meeting that 75% threshold to be used on payroll. We have had conversations with the SBA field offices, and we are hearing that if you don't meet that threshold of 75% of the funds being used for payroll-related costs, that may be a binary test that says you're not subject to any forgiveness at that point. Now, for an independent contractor, that won't be difficult to do because you're going to get 80% of the money effectively that you receive will be used to fund your income replacement, and so you'll meet those thresholds. But for an entity that does have employees, there's definitely some planning to do to make sure you're going to make that threshold, because if Treasury does come out on that in that manner, that's a gate, not a sliding scale, you'll want to make sure that you're going to get to that threshold. So I mentioned that the forgiveness is limited to $15,385, or that income replacement. And so from an independent contractor, if you think back, I said you'd be eligible to apply for a loan of $20,800. You're going to get forgiven your income replacement up to that $100,000. So that would be $15,385. And so there is a delta between those two numbers, right? That's about a $5,000 delta between the two. And what would happen in that case is that would convert to a loan effectively. And that loan is going to be a very favorable loan. It's going to be a loan with a 2-year term. You will not have to pay interest or principal for the first 6 months after receiving it. And it bears interest at only 1%. So it's a very favorable kind of working capital loan that you'll need to pay off within 2 years. And generally, those are going to be monthly payments starting after year 6, and then, after that, amortizing the loan. So it does provide you a little working capital if you need to do that. So, that's the basics of the loan program itself and the forgiveness element now. And there are some great resources that are out there too. And so I just wanted to point those out for you. At CLA, we've developed a COVID relief center, and we do biweekly live streams. And a lot of those have been focused on the Paycheck Protection Program. So I'd encourage you to go to our website, and you can see all the resources we have out there, both thought leadership and then, online videos and things like that you can view. The U.S. Department of Treasury probably has the most comprehensive site on this, and that's where some of these FAQs are that I've mentioned, and that guide to helping size your loan. The other thing that I would mention is the U.S. Chamber of Commerce. They've got some great information for small businesses as well as independent contractors and self-employed individuals, and is another great source of information. So I hope you found this informative today. I know we had limited time. I will work with my subject matter expert team to respond to all of your questions as quickly as possible, and somebody from CLA will reach out to you with responses. But I appreciate the opportunity to come talk to everybody today, and look forward to interacting with you all on this matter and others in the future. Thanks so much.
Jack, thank you so much. A wealth of information. We know you're so busy during this time, and to give us a few moments, we sincerely appreciate it. And we will take the questions and forward them on to you.